All right, guys. Yes, that is a giant packet in your hands. Yes, we're doing it all today. Don't panic. It's not as terrible as it might feel. All right, guys, for today, we are looking at how to file tax forms. Um, if you file your own taxes, you would probably use something online like I do. I use TurboTax. I know there's other things, H&R Block, other tax programs you can use. I'm going to show you how to do them using the actual paper copy forms. Reason being, one, there's no program out there for me to demo taxes without actually filing taxes. Okay, so I can't like have you practice and demo online. I can't find anything online that'll let me have you do that. Also, though, by doing them by paper form, I think you have a better understanding of what's going on and where all the numbers are coming from. Okay, I know I understood taxes better just by teaching this the first couple times I taught it. I'm like, oh, that's where those numbers come from. Okay, so just so you know. So we're going to go through. So on the back 2 pages of this are your tax forms. So we're going to be working through those. If you want to tear them off when we get to them to work through them easier as we work through the packet, that's fine. Okay? Okay, so there are 3 basic Internal Revenue Service tax form returns. So you can use the short form, which is the 1040-EZ and the 1040-A, which is what we're going to go through today. Or there's called a long form. I used to teach this, and honestly, it's not worth it for me to take the time to teach it to you because you guys don't have enough, I think, real-world experience on what you need to have on a long form to actually do the long form. So it's lost on students, okay? And it's long and it's hard, and honestly, if you fall into that boat, you're probably doing them online or you're paying someone to do them for you, okay? So we're going to look at the EZ and the A, which are the 2 short forms. But on all of the forms, very important to know, the IRS allows you to round every monetary number to the nearest dollar. So you're not going to be writing cents for the most part on here, okay? It gets rounded to the nearest dollar on all of your calculations. All right, so on any tax form, you got to fill out your name, address, social security number, your filing status, all the stuff that we've talked about already. Depending upon the form, you must also supply information about family members that you support financially. So what do you call those people that you support financially? Daisy? Those are your dependents. Okay, so any person that you report that you support financially are your dependents. So like your parents, when they file their tax forms, you are their dependents. Okay? And then information included on the tax forms that lowers your taxes. Do you guys know what those are called? Very good. Those are your exemptions. They include your dependents, as well as the taxpayer themselves. You yourself are an exemption. If you are married, your spouse can be an exemption. Your children are exemptions. Okay, so all your dependents, they help lower how much taxes they take from you. So this is all about like, here's how much you make, right? We've looked in the tax tables and you guys see what the tax should be, right? We talked about different things like medical stuff, like the cafeteria plans and different like medical stuff. That money comes out and they don't tax you on it, right? So it took the number that they charge you on taxes and it lowers that number. So then you pay less taxes. So all of these things kind of play into it. How many kids you have and all that stuff takes your income and lowers it so that they're charging you less and less taxes. All right, so looking at the 1040-EZ, which is what you guys would fill out right now. Like if you're working right now and you go to file taxes come January, you guys will do the 1040-EZ, okay? So there's a list of requirements at the front of your instruction booklets when you guys would actually do these by paper. It's an actual booklet that you would fill out. So some of the major requirements, so there's some other things, but the major ones to know. For the 1040-EZ, you have to be single or married filing jointly only. So if you're any of the other options, you cannot use the 1040-EZ. But you guys, I assume, are all single, right? Nobody's married in here. So you guys would all use this form. You have no dependents other than yourself and your spouse. So if you have kids, can you use this form? No. Okay, so as long as you don't have any children, you could use this form. Your taxable income is less than $100,000. So if you would make over $100,000 for the year, you could not use this. All right, but as long as you're less than 100, you could use this form. Your income's only from wages, salaries, tips, taxable scholarships, fellowship grant, unemployment, or Alaska Permanent Fund dividend. And you get paid like money for living in Alaska for the whole year. I don't know exactly how that works, but there's something like that. It's called the Alaska Permanent Fund dividend. But as long as you're not like getting money from like you were at the casino and won a whole bunch of money, right? Some things like that. As long as your income's from normal income things, you can use this form. And your taxable interest is not over $1,500. So money that sits in the bank sends you a form, says this is all the interest you earned for the year, has to be less than $1,500. I mean, I got my interest form the other day from the bank for the month. I think I earned like 40 cents. I'm not going to be over that amount, okay? You got to have a lot of money sitting in your savings account to make it over $1,500 in interest. Okay, number 1. Avery's employer withheld $21,639.90 in federal income tax. After completing her return, Avery determined her tax as $23,984.32. Will Avery get a refund, or does she owe the IRS, and how much? She owes. Why does she owe? Good. All right. She determined she should be paying almost $24,000 in tax. Her employer only took out $21,600. Good. If we just subtract them, we should find out how much. All right, so $23,984.32 minus $21,639.90. All right, so just subtract them. So $2,344.42. Does she owe, was it, or does she get a refund? She owes. All right, her employer only withheld so much, not enough. I don't know about you guys, but I would not be happy at come tax time to find out I owed $2,300 in taxes to the government. That's frightening. Number 2. Say that again. What? When we actually file the tax forms, we don't. Number 2, Anthony is an architect who works part-time as a zookeeper. Information from his tax worksheet is in wages from his architect job, wages from the zookeeper job, interest, and dividends. What are dividends? Do we know what that is? It's actually our next chapter. It's from stocks. That's money that you earn from stocks that you have. What is Anthony's total gross income? Just add them all up. Good. It's just something for you guys to see that no matter what jobs you guys have, they all get added together. So he has 2 different jobs. He earned interest on money in the bank, so that's considered income, and money that he earned from stocks that they have. So everything that puts money in your pocket is considered income, not just from the job you're working. Back to Lauren's question back there about I thought we rounded everything to the nearest dollar. And something like this, you would add everything up, and then when it goes on your tax form, then you'd round it. But you wouldn't want to round everything first. So add them all up. His gross income is $93,683.62. Based on what we see in this problem, would he be able to use the 1040 easy form? As far as what we can see, yes. He's got his income just from normal things, right? That stuff's allowed, and he makes less than $100,000. What would keep him from using the 1040 easy? If he was married and filing separately. If he has kids, he wouldn't be able to. But as long as he's single or married filing jointly, he meets all the other requirements. Okay, number 3. Noah is single with a taxable income for last year, $54,982.98. His employer withheld $12,875.93 in federal taxes. Use the tax tables booklet to determine Noah's tax. Do you guys have your tax table booklet? Get it out. A big giant booklet I gave you guys a long time ago. All right, we're going to need them because we're going to be doing some taxes today. We're going to look up some info. So we want to look up, there's the amount that he made, and he is single. So we're going to need to go to our tax table book, find the right table, and find out how much he owes. Hunter, Maximus. So you guys got your tax pay booklet? Let's find it. We're going to need it today. This isn't the only time I'm going to ask you to look at it, so we need to have that out, please. All right, so as soon as you get your booklet out, go ahead and look through there, see if you can figure out how much tax Noah should be taxed. Very good. All right, as you're looking through there, you should have flipped to the table that had the 54,000. It's in the top corner up in there. Look all the way down to where he falls and then underneath single. So right now, before we look at anything else, did his employer withhold enough, or is he going to have to owe money? They withheld enough. They withheld over almost 13,000. All right, so does Noah get a refund? Yes. Good. So they withheld $12,875.93, but he only owed $9,483. So just subtract those. We'll figure out how much of a refund he gets. So when people get excited about tax refunds, it's because their employers took out too much money. So he's going to get a refund of $3,392.93. That's something to be excited about, right? Oh, yeah. So one of the things we're going to look at today, though, is, and I want you guys to get an understanding of, when we go through like exemptions and deductions and things like that, we are trying to get the amount of income that we made. Like if this is how much he made, once we go through all the different steps on your tax forms as we get going through them, we're no longer going to be looking at this number in the tax booklet. We're hopeful that because of exemptions and maybe medical, like those cafeteria plans, like all that stuff, that we can take this number and lower it. Because what happens if I have a lower number than that? I'm going to pay less in taxes. I'll get a bigger refund as a minor. Yeah, you're not going to get Social Security and Medicare back. We look at, this is your federal taxes. We're looking at federal taxes today. So when you're filing tax forms, you are filing federal taxes, you'll file your state, and then you'll have to file city as well. So we're only going to be talking through your federal ones, how to file those. So yeah, not your Medicare and all that stuff. It's just what you've paid into the federal government. As far as like what you guys get back though, when I looked it up last week. I was talking to Nathan about it. If you make $6,500 or less, that's when you get back all of it. So usually most high schoolers make less than $6,500 a year, so you'd get it all back. So if you make more than that, you're probably not going to get it all back. Depends. Okay, so now we're going to actually get into filing tax forms. Joanne, you awake? All right, so we're going to be looking at the 1040 Easy. So in your notes, the back 2 pages are the 1040 Easy and the 1040A. If you want, at this point, pull those 2 forms off. Okay, we're going to be working through those. You can pull them off. That way you can kind of look at both things a little easier. Last 2 pages in your notes, you can tear those off. That's your 1040 Easy and your 1040A. That way you can kind of have those and still reference the problem as we're going through it. All right, so we're going to look through example 4. Elizabeth Allison, she's a food editor for a magazine. She received a W-2 form from her employer and a 1099 form from her savings bank. Okay, so a W-2, just refresher on that. W-2 is the form that you will get. They have to have it to you by January 30th. Your employer will send to you. It says all the money you made for the year and how much money they took out. Okay, so that's your W-2. She gets a 1099 from her bank. So that bank will send you that 1099 form, just says all the interest you earned for the year. Okay, so what is Elizabeth's taxable income for the year if she files as a single taxpayer? All right, so she is single, And now when it's asking for taxable income, is that just how much money she made? It is not. It is not. Your taxable income is what that magic number that you made that the government's actually taxing you on. Now, I just talked to you guys about if you have a cafeteria plan, you have all that medical stuff, you have deductions and exemptions, that taxable income lowers. All the more things you can deduct, it lowers your taxable income. If I just wanted to know how much she made, I'd ask what's her gross income. Okay, there's that difference. When it says taxable income, we have to actually file a tax form to figure out what her taxable income is. Okay, we don't know that otherwise. I can see how much her gross was based on this. How much did she gross? Yeah, here's her gross right there. Okay, great. She grossed that, but that doesn't tell me how much. Are they going to tax her on that? Not necessarily. Well, here's your 1099. Oh, I just totally lost that. There it goes. Her 1099 is this form down here. And this form tells you how much she earned in interest from her bank. So she earned $956 in interest. If I just asked for gross income, you would add those together. But I want to know her taxable income. So we need to go to your 1040 EZ form. Okay, so that's what we're going to fill out. Let me pull mine up separately here. Okay, so notice right at the top, it says it's 1040 easy. So right in the top corner, because I'm going to be asking you, like when we have our test, your test will be on Friday this week, by the way. When we have a test, it's going to be based on which form. So you need to make sure you're using the right form. So it says easy right in the top corner. Again, we are doing 2017 because the current stuff for 2018 has not been released yet, even though it's November. It's not out yet. All right, so let's go ahead and fill this in. It says first and name and initial. What's the girl's name? It is Allison. Elizabeth Allison. So first name is Elizabeth. And Allison, no, we don't know her middle name. Allison's her last, sorry. Allison. Does she have a spouse? How is she filing? It says she's filing single. So where here it says if joint return, we'll leave that blank. We're not going to worry right now, but address and whatnot would go up in here. We actually do have her address. I guess we could fill that in. 6204 Lincoln Street. Pennsylvania's PA, right? I had a brain fart. I wanted to write PN. I'm like, that's not right. All right, so we can fill in her address. As far as her social security number and all that, it's just zeros on here. So we're not going to talk about people's social security right now. All right. So we have all of that. And then we're going to flip down to where it says income. Now, they try to make these forms to, remember those like dummy forms that we've worked through, those worksheets that try to tell you step by step what to do? They try to do that on these forms as well for you. So the first part is all about income. This is all your income that you've made. Okay, all goes right here in the income spot. So if you notice, they're kind of broken down, like there's payments, credits, tax, like there's different sections that we're going to work through. So all of the income goes here. So box 1 says wages, salaries, and tips. This should be shown in box 1 of your W-2. So if you look back at her W-2, see how the little boxes on there have numbers in them? They tell you it should be box 1. So if I look at box 1, 83,600. So 83,600. All right, so they try to make this foolproof for you. They tell you where to look. Joanne, write that down. I'll make you stand, hon, if we can't stay awake. All right, number 2, taxable interest. If the total is over $1,500, you cannot use form 1040 EZ. What did we have taxable interest? Okay, we had her interest that she got. Is it over 1,500? No. So we're okay to use that. Or was it 956? Right here on these forms, this is where if you had change, if it was like 956 and 14 cents, we would leave off the cents. Okay, unemployment compensation, Alaska Permanent Fund dividend. Do we know if that she has any of that? No. So we're just, you can just leave it completely blank. You can just draw a line through it. You could put zeros on it. It's whatever you're comfortable with. Typically, I leave them blank, just kind of moving on to the next thing. All right, line 4. Add lines 1, 2, and 3. This is your adjusted gross income. Okay? So again, they try to make it foolproof. They're telling you, as long as you read one line at a time, it should be okay. So add those lines together. So add my 2 lines. So we're going to have 84,556. All right, as we're going through this, at any point, if you have a question, please ask, okay? Line 5. If someone can claim you, or your spouse, if a joint return, as a dependent, check the applicable boxes below and enter the amount from the worksheet on back. Okay, so for this one, is anyone claiming her? She's just herself, right? So if we look at the back, again, they go through, if you can use this form, if. But here's the worksheet on back that it's referring to. Worksheet, okay? So this is trying to help you figure out if you can file this or not. So use this worksheet to figure out the amount to enter on line 5 if someone can claim you. Okay? So again, they're trying to make this foolproof. They're like, okay, if you don't know, let's use the worksheet on the back and we'll figure out what we should put here. Okay. So amount, if any, from line 1 on the front. Did we have anything on line 1? Yes. On line 1, we wrote 83,600. And then look, it says plus 350. And then it says enter total. Okay. So 83,950. All right, then it says the minimum standard deduction is 1,050. Okay. Then it says part C, enter the larger of line A or B here. What's larger, A or B? A. Okay, so I'll rewrite the 83,950. Maximum standard deduction. If single, enter 6,350. If married filing jointly, enter 12,700. She is single, so 6,350. E, enter the smaller of line C or D here. 6,350, right? F, exemption amount. If single, enter 0. If married, filing jointly, yada, 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 but she is single. So I'm going to enter 0. G, add lines E and F. Enter the total here and on line 5 on the front. So E plus F, 6,350. So that is what I put on line 5. Now, would you have known that that's what you should put there? Would you know to flip to the back to write it down? How would you know to flip to the back? It says use the worksheet on the back. Simple enough? Yeah, simple enough. Okay. Now, what we just did, let's read that again and see what it says. If someone can claim you as a dependent, then you're going to fill that out in the back. Can someone claim her besides herself? She's not married. Do we know, like, if she's a college student and, like, her parents are still claiming her? Doesn't say that. So should we have used the form on the back? I wanted you to see the form. I wanted you to understand it, but what should she have been? Keep reading. If no one can claim you, enter 10,400 if single. So, if her parents could have claimed her, if we knew that her parents were claiming her, like your parents will claim you, that's what would go on that line. But, do we know that? No. So unfortunately for her, we did that as if her parents were claiming her. We're not going to, that does not tell us her parents are claiming her. We'll do some examples tomorrow where it's like a college student whose parents are claiming them, and we're going to have to go through that process again. Okay? But for her, enter 10,400 if single. Right? I wanted you to see that. I wanted us to work through it. The dummy proof, right? Telling you what to put. Use the bigger number. Use the smaller number. But for her, she actually does not fall into that. Okay? So hers would be the 10,400 because she's single. Her parents are not claiming her. Line 6. Subtract line 5 from line 4. If line 5 is larger than line 4, enter 0. Is line 5 larger than line 4? Is line 5 larger than line 4? No, it's not. I know sometimes you're like, wait, which line did we talk about? All right, so it says then subtract line 5 from line 4. Okay, can I subtract those? Yeah. So that is $74,206. I'm doing exactly what it says. Subtract line 5 from line 4. So this is your taxable income. So although her gross income was $84,556, they're not taxing her, right? Her wages and her interest from the bank, she made over $84,000. So in the tax table booklet, I'm not looking at $84,000. Tax table booklet, we get to only look at then $74,206. So the government allows you an exemption for yourself. Oh, you know what? I have an old form in front of me. You're right. I'm sorry. 156. Thank you. I have an old form in front of me. I didn't actually type it in. Thank you. Daisy, is that what you were going to tell me too? At least 2 of you checked my math. Yeah, sorry. I was looking. I have an old form. It's from 2016 tax forms. In 2016, it was 10,350 instead of 10,400. So that was the difference. All right. So next part. So did we answer the question though, on the part of the homework we were, or the notes that we were on? The part of the notes asked you for what is her taxable income, right? If you're looking at your notes packet, her taxable income is $74,156. Okay, but if we flip to the next part in your notes, since Elizabeth is filing as a single taxpayer and no one can claim her as a dependent, she can take a deduction from her adjusted gross income. This is what we just did, right? And get through there. All right, so that's how she's getting that part. So what is Elizabeth's tax? Right, so she's not being taxed, again, on just how much she made in her interest. The government allows her deduction, so now we're only looking here. So how much will she be taxed? So let's just continue to work through this form. Line 7, federal income tax withheld from Form W-2 and 1099. Federal income tax withheld. So we're looking back in your notes. So, and I had circled it when I was on that part of the notes. So looking back at her W-2 and stuff right in here, which box tells you how much her income tax has been taken out? Box 2, federal income tax withheld. It literally says it in the box. So $15,884. 8A, earned income credit. This is one of those things, guys, if I'm going to give you some of this, there's a lot of different things on these tax forms. So like if you fall under this, or if you have this, or this, a lot of times you don't have all that stuff. So if I don't give it to you in the example, you're probably not going to have it, okay? Like that Alaska permanent funds, dividend thing, whatever, all that stuff. So there's a lot of different things that are on here that I just don't give you any examples. All right, non-taxable combat pay election, like I don't even know what that is, okay? Add lines 7 and 8A. These are your total payments and credits. So $15,884. I will probably never give you anything on 8A. All right, 10, tax. Use the amount on line 6 above. Okay, you guys see line 6 to find your tax in the tax table in the instructions. So let's go to your tax table booklet. We're using the amount it says from line 6, which is that line right there. So I'm looking up $74,156. $74,156, and how is she filing? Single. Good. $14,283. Is anyone not able to find that in your tax table book? Just looking up the amount over the single column, there's her tax. Line 11, healthcare, individual responsibility. I'll tell you right now, I'm not gonna give you anything to ever put inside that line, okay? Add lines 10 and 11. This is your total tax. $14,283. Since we're not going to have a lot of like the little weird things in between there, a lot of times you're rewriting the same number over and over. Okay, so just be aware of that. All right, here to find out, do we have a refund? If line 9 is larger than line 12, is line 9 larger than line 12? Yes. Okay, so I'm going to fall there. This is your refund. Subtract line 9 from line 12. Okay, subtract line 9 from line 12. So 15,884 minus 14,283. So her refund is 1601. There's her refund. Now, when you're filling out these forms, and just like TurboTax, things like that, whatever your refund is, they'd ask for like routing numbers, like whatnot, so they could directly deposit that right into your account. Okay, so that's what all this is here. Look down, then it says amount you owe for line 14. If line 12 is larger than line 9, subtract those, and that's the amount you owe. Okay, so just make sure as you're filling out forms, like we're going to do some activities tomorrow with them, test on Friday, make sure you write it in the right box. I have some people like, oh yeah, refund, and they write it down, and like, you actually owed $1,600, not a refund of $1,600. So make sure you're putting it in the right box, whether they're a refund or if it's amount they owe. As far as everything else down below here, third-party designee, so if you want someone else, like this is all stuff, you'd have to sign this. This is not actually your tax returns, we're not going to sign them. And then if somebody prepared your taxes for you, they would sign down saying that they actually filed them for you, so they're responsible for it. So as far as what we will fill out, that would be where we would stop. Whether we get a refund or we owe money, we would stop right there. All right, that's a 1040 easy. How are we feeling? Good? Devin's great. All right, he's the only one who's talking to me. Thanks, Devin. Pretty simple. They tell you line by line what to write down. Should be pretty easy. Okay. So we went ahead and did all of that already through Elizabeth. So now let's look at the 1040A. So it's very similar to the 1040 Easy, but it allows for dependents. So if you have children, this would be your form. Okay? If you're trying to get the easier form. So the 1040A just allows you to have dependents if you have kids. All right, so use info below to begin filling out 1040A. So Kenya and Robin Omar are married with one child. Kenya is a pharmacist and Robin is a store manager. How many exemptions can Mr. and Mrs. Omar claim? So let's go ahead. We're just going to go through the 1040A form based on all the info from Kenya and Robin. Okay. So let's go through and fill out their info. So first, name and initial. So first one listed on their W-2 on your notes was Kenya, so we'll go ahead and put Kenya still as the first one. This was the very last form in your packet that you should have ripped off at one point, right? And this is example 5 in your notes. All right, and then you have Robin Omar. All right, we have their address, 14 Rachel Drive. Is it an actual place? I don't know. I didn't create the example, so I have no idea. Oh yeah, because it is Ohio, isn't it? I don't know. Is Walnut Creek an actual place in Ohio? Is it? Do you know where is it at? All right, so this form, slightly different. So filing status, single, married filing jointly, married filing separately. What were they? Married filing jointly. So we're going to go ahead, you can put a check mark, you put an X over it, whatever you're comfortable with. So you're marking which one it is. And then exemptions. If someone can claim you, so it's like a parent, is a parent claiming this person? It doesn't tell us they are, so we're assuming no. So we're allowed to click that they are themselves. Do they have a spouse? Yes. So we'll check that box. Dependents. They have one child. They did not. If you look at their, it is Robert. That is listed on their form. So, Robert. Oh. All right, and then you would put their social security number. Obviously, we just got a bunch of zeros, so don't worry about it. All right, so then look over to the side. It says boxes checked on 6A and 6B. How many boxes did we check? On 6A and 6B, we checked 2. Number of children on 6C who lived with you, who did not live with you, or dependents on 6C not entered. So ours is always going to be the ones that are listed for them, right? So we listed 1. All right, add numbers on lines above. 2 plus 1 is 3. Look at that math we're doing today. 2 plus 1 is 3. All right, so total number of exemptions claimed, 3. All right, moving on into this form. Line 7, wages, salaries, tips, etc. Attached form W-2. What box did that come from on their W-2s? Box 1. Now, look at your notes back on, would have been the next slide, which I don't have pulled up right here now. But you have their 2 W-2s. If they're filing jointly, what do I have to do with lines 1 on their boxes? I got to add those. So I'm going to take line 1, or box 1 and box 1 on both of them. We're going to add them together because they are filing together, so their income gets put in together. So 65,001. Now, 120.97. So we have change listed on here. When I put it on here, am I going to put the change? Yes or no? No. When you add them together, you get $117,247.73. So what would you do with that? Round it up, right, to the 48. So, guys, I want to make sure we're clear. When we're doing that and we're adding these together, do not round them to start. Okay? On here, they had their W-2s. Box A, they're actually circled on your notes. Those box A is where your income is coming from. We're adding them together because they're filing together. So it's husband and wife. So I add exactly what's on here, and then when I go to put it on the form, then I round that number. They're rich. Well, one of them's a pharmacist. So 248 would round to the nearest dollar. So it'd round up. Yes, you would. All right, 8A, taxable interest. Attachable Schedule B if required. All right, do we have anything? Look back at your notes. What does it say? Good. If you look back in your notes, I gave you info. $987 in interest, $1,200 in stocks. Now, If I'd actually given you a form as opposed to writing this, what form would that show up on? 1099. But I didn't give it to you, I just listed it. Sometimes I'll give you their copy of the form, sometimes I'll just tell you what they had. So in this case, I just listed it for you. All right, so now notice the difference on here. We have taxable interest. That is the part from the bank, $987 in interest. Where do the stocks go? The dividends. We're just going to be considered ordinary dividends, okay? And we're not getting all fancy on this. All right, so we're going to look at 9A, ordinary dividends. That's where we write the $1,200 from stocks. Okay, so for us, we're going to try to keep this as simple as possible. I may give you some things, but I'll be very specific on how I name it so you know exactly where it goes. All right, so if it's interest, all right, it goes in that line. If it's stock dividends, don't worry, qualified, ordinary, it just goes in the stock dividends. Okay? All right, line 10, capital gain distributions. Did they earn money? This is where if they have an IRA, I'm dyslexic today. IRA, like if they had money like come out of that as income that they had for the year, you would write that stuff down. Pensions and annuities, if they took money out of those. Like I know Mrs. McCourt, math teacher upstairs, she has an annuity from her old job, money that she had kind of put in when she worked there. She went ahead this year and pulled all that money out of her annuity to pay off some debt that she had, some credit cards, some other bills and whatnot. So that for her this year, when she fills out her taxes, she'll have this here. She would have annuities, the money that she pulled out of that account that was pre-tax when she put it in there years and years ago. So she would actually have something for that line, okay? I did not give you anything that they pulled money out of some random savings account and things like that, okay? So we don't have to worry about it. Unemployment compensation, Alaska Permanent Funds, no, we don't have any of that. Social Security benefits, I did not tell you any of this. If I did not tell you specifically they have any of this, leave a blank. So add lines 7 through 14b. So we really have to add 7, 8, and 9. So let's add those together. 117, 248, plus 987, plus 1200. So 119, 435. Questions so far? That's all the income. So this is that section where it's saying everything that you got money this year. Anytime money came into you, this is where it's going. All right, next part is your adjusted gross income. So this is where we're trying to adjust how much money I made so that I'm not getting taxed on all of that. Educator expenses. Me personally, I get to fill this one out every year. As a teacher, I can put up to $250 for educator expenses, money that I spend throughout the year on stuff for you guys or for classes or whatever that comes out of my own pocket. So that's where I can put that. That counts. Yep. For this example, they didn't give us anything like that. IRA deduction, student loan interest, like I still am paying student loans. So all the interest that I am paying on my student loans, I get to deduct off of my income. So that's always nice for me. I always look for that. I get that in the mail every year. Tuition and fees, if I would take college classes, the amount that I paid for college, I could deduct that as well. Add lines 16 through 19. These are your adjustments. For this example, they have none of that. So I got nothing. Subtract line 20 from line 15. So 119, 435. Okay, but that's where all that kind of goes, right? If you're taking college classes, you're paying interest on student loans, all that good stuff. Yeah, this one's a little bit longer, but this is not the long form by any stretch. That's a lot longer of one that you could fill out. That's the one we're not going to actually do. And you have a lot more stuff going on. Yeah, like if you're like donate stuff to charity and like that all, like itemize your deductions, that's where all that goes. All right, on the back side, enter the amount from line 21. What was that? 119, 435?
435.
Thank you. All right, so just enter. Why would they have you enter that number again? Because we're working off it and we're on the back side. Yeah, they're like, hey, stupid, let's follow that number over so we can see what we're doing. All right, 23A. Check if you were born before January 2nd, 1953, or you're blind, or your spouse was born before there or blind. No, you're not. All right, obviously we're not checking that. If you are married filing separately and your spouse itemizes deductions, are we filing separately? Nope. All right, so let's worry about that. Enter your standard deduction. Every year, this is where students struggle to know what to put here. Do you notice that line opens up to the side? Enter, look at this, guys, line 24. Do you see how it opens up to this big bubble down here? This big bubbled line is open to line 24. It's like, hey, look over here. All right, standard deduction. This is where we figure out what to put on that line. People who check any box on line 23A or 23B or who can be claimed as a dependent see instructions. I'm not going to put that on here, okay? We're not going to ever check anything for this class that we're born before 1953 or we're blind. So we don't have to worry about it. So down here, though, all others, single or married filing separately, $6,350, or married filing jointly or qualifying widower, $12,700. If you're head of household, $9,350. So we are married filing jointly. So this is us. So $12,700 is what we write on this line. But every year students are like, I don't know where that number comes from. That line opens up to the box over here. Read the box. Hunter, did you need something, Hunter? Okay. 25. Subtract line 24 from line 22. All right, 119, 435 minus 12,700. So 106,735. Okay, so I get a standard deduction just for being married. And then it says exemptions. Multiply 4,050 by the number on line 8D. What was the number on line 8D on the front? It was 3. So 3 times 4,050 is 12,150. Subtract line 26 from line 25. Okay, so 106,735 minus 12,150. What'd you say?
Taxes are like a game to keep your money.
So now we're down to 94,000, right? 94,585. So what was my gross income when I started this? 119,000. And now I'm all the way down to 94,000. So instead of me flipping in the tax booklet to 119,000, which would have been like the goofy tables in the back because it's over 100, I'm down to 94,585. So even though I made this much, they're not taxing me that high. They realize you have kids, you're married, you have things in your life going on. Okay, and then you get another deduction for that. All right, so now it's line 28, tax. How do I find tax? I look in the booklet. Yeah. So now I'm down to, okay, I'm finally down to what they're going to tax me on. I grab my booklet. So when it says tax, grab my booklet and see what I find. So 94,585. Now which column am I in? Married filing jointly.
15,000.
Perfect. 15,121. So 29, excess advance premium tax credit repayment. Anybody know what that is? I don't either. All right, 30, add lines 28 and 29. Great, 15,121. Told you, there's some goofy things on here. If you look at like the long form, there's a lot more goofy stuff on there. All right, so don't get all up in arms over all that weird stuff. I don't know what half of it is, I'll be honest with you.
If you are like an elderly person who depends on like your parents for food, are they considered like, is it like when that like son would file taxes, would they be a dependent?
They could, yes, claim that as a dependent. Now, okay, guys, the question, in case you didn't hear Abby, she was asking if you're like an elderly person and like your son or your daughter like cares for you and you depend on them, could the son or daughter then claim like their parent as a dependent? Yes. Now the thing is, if the parent claims, or if like the son or daughter claims their mom or dad as a dependent, then they can't claim themselves. Same thing like if your parents claim you on taxes, you can't claim yourself. So you're not going to get that extra money taken off, right? That exemption. So you got to be careful. They can't claim you and you claim yourself at the same time. That's tax fraud. You can't do that. Because it would lowering how much taxes you pay for both of you. All right, so 31, 32, 33, 34, 35, all of that, right? This whole little section off to the side. I'm probably not going to give you anything that falls in there, okay? It's all like different things for different, scenarios. We probably won't have anything in there. So add lines 31 through 35, nothing. Those are tax credits. Now, what tax credits, what that means is if you would qualify for anything in there, they would like kind of count that towards money that you've already paid towards your taxes because you fell into something like that. We're not going to talk about any of that in here. 37, subtract line 36 from 30. Easy for us. 15,121. 38, healthcare, individual responsibility. We're not talking about that. We're assuming you're all covered underneath your employer. Add line 37 and 38. I told you a lot of these you'll be repeating the same numbers. All right, 40, federal income tax withheld. Do we have that one? Yes. Yes. So again, since it's jointly, if you look back in your notes on their W-2s, remember this is box 2. Right next to the ones that were circled on your example, we're going to add those two together on how much income tax was withheld. So $8,765.99 plus $6,198.65. They are, aren't they? And then we will round that to the nearest dollar. So $14,965. Because it was $964.64. So we went ahead and round it up. Line 41, estimated tax payment. People are weird and they do that. We don't have to worry about that. Earned income credit. This has to do with kids and how much money you made, how many children you had. Like, we're not going to fall under that. We're not going to talk about that stuff. So the rest of that we're not going to have. So line 46. Just our federal income tax, so $14,965. There's just too many weird scenarios, I could never hit them all. All right. Refund or amount you owe. So what do you think? If line 46 is more than line 39, is 46 more than 39? No. And it says if it is, subtract that. That means that's the amount you've overpaid. All right, so do they owe? Oh, no. Because that's how much, that's their tax. This is how much was withheld. They owe. And again, amount you owe. Subtract line 46 from line 39. Oops, I lost my line 39. They don't owe much, but they do owe. So, all right, so we're just going to subtract those. 15,121 minus 14,965, 156 bucks, which isn't terrible. And we will stop there with that one. All right, so we did a 1040 easy. We did a 1040A. 1040A allows me to have kids. I get an extra tax deduction when I have those kids. Questions on the two forms? Right, the more kids you have, the more tax deductions. But the more you have to pay on your kids throughout the year, so. Oops. Unless you're a terrible parent. Either way. All right, we did all this. All right, the other part I want to talk to you about real quick, the 1040, the long form. So there's 1040 easy, 1040A, and then just 1040. Okay? Easy, A, just the 1040. So the 1040 is considered the long form. So there's other sources of income, right? You could have alimony. What's alimony? It's like child support for one of the spouses, right? Kind of. It's not for a child, it's for the adult. If you get divorced, let's say I was married and my husband made way more money than I did, and we get divorced. I am used to a certain way of life because of being married to someone who made so much money. So when we get divorced, he has to pay me alimony. He would have to pay me so much money so I can maintain the same level of life that I did. You could sign a prenup where they would not have to do that. Absolutely. Yep.
To me, that sounds like this woman is
And sometimes I see it that way, but every scenario is different. It could be maybe the husband didn't want the wife to work, so therefore she never got a job, then they get divorced. She doesn't have a job. I agree. Sometimes I think that people do take advantage, absolutely. But anyway, and then prizes. Let's say you won some big drawing. Let's say you went on the Price is Right and you won a car and everything else, right? Powerball, you won the lottery, things like that. So that's prizes. So if you have any of that stuff, you can't do the 1040 Easy or the 1040A. You'd have to go with the long form. So you'd have to use, there's Schedule A, Schedule B. These are like more worksheets, like the one we filled out on the back side of the Easy, but they're longer worksheets. They help you itemize your deductions. So like if you donate things to charity, whether it be you take a big box of stuff to Goodwill, you can claim that on your taxes, right? If you actually donate like to church, like I give money every week to church, I can deduct that off my taxes. So like for me personally, I have to use the long form because it's called itemizing your deductions. I do that. Everything that I've given and spent and this and that, and I can separate all of that so I get more of a tax return. Yes. It's like they're rewarding the giver. Absolutely. Just so you guys can kind of see, I made a list for you. Like, so itemizing your deductions. So you can itemize medical expenses. Now, there is like a limit. Like, you have to have spent like X number of dollars before you can like claim that. Do you know what I mean? So it's not like I ran to Walmart and bought a box of Band-Aids, so I get to claim that. No. It's over, I think it's like 10,000 something. So if you spent over like $10,000 on medical expenses for the year, then you can claim whatever's over that. Property taxes paid. I own my own home, so I pay property taxes. So you can get a tax deduction for that. State and local income taxes paid. Casualty and theft losses. Your house was robbed, so you were out money because you had to replace things. Your house caught on fire, things like that. If you move, you can deduct moving expenses. You had to get a U-Haul, you hired a company to come in and move, things like that. Business expenses. My husband's considered to have a home office. He's a teacher, but he doesn't actually have like a classroom. He has an office in our house that he works out of. He's adapted PE, which is gym class for special needs kids. So he travels though from all of Perrysburg schools and Maumee schools. So like he travels and teaches a class, and then he may have like an hour break before his next class. So he comes home and works on paperwork and IEPs and all that good stuff at home. So we consider to have a home office. So we can deduct expenses for that. Like if he has to buy a new laptop. My laptop the school gives me. He doesn't have one, so he has to buy that with his own money. So he can deduct that as business. Alimony paid. So if you're paying your spouse alimony, or alimony earned, that would also go on here. Mortgage insurance. I have a mortgage. I pay insurance on that. Again, stuff I can deduct. Charitable contributions. We talked about that one. Gambling losses. You're really bad at gambling. Job seeking expenses. So if like you're placing ads to try to get a job, you can deduct those. And tax preparation fees. You pay someone to do your taxes, you pay for TurboTax, things like that, then you can actually deduct that stuff. So I fall into quite a few of these, so we always itemize our deductions. We use the long form. Tax credits. You've heard me say these phrases. Just make sure you know what they are for vocab. Tax credits are another way to reduce your taxes. A tax credit is an amount you subtract from your tax after you looked it up in the table. Deductions are subtracted from the income before you looked it up in the tax table. So there's credits, tax credits, and then there's deductions. Deductions come off your income, so you look up a lower number. Tax credits come off of the taxes that you looked up in the table. Okay, so it's kind of like there's two different things. Deductions, right, were like your children were a deduction. They took off how much income that you looked up in the table. But after you look up the income in the table, if I get a tax credit, there's like child care tax credits, like you get so much like per child that you have as a tax credit. So then it subtracts off of that tax number. So there's just a little bit difference there. Two popular tax credits. One's the child care tax credit. So if you paid a daycare center, babysitter, summer camp, whatever, to care for your child, you can get a tax credit for that. Now for me, I no longer get this because I may pay like my dad and my father-in-law to watch my kids, but they don't claim it on their taxes. Since they don't claim the money I pay them, I don't get the child tax credit. I used to. When we lived in Findlay, I paid a babysitter, and she actually filed taxes, had a tax ID number, you know, she claimed everything. So then I got this. Because then my dad would have to pay taxes on it. And I don't want him to have to pay taxes on the money I paid him. So it's like under the table, as people always say. You know, you're here, I'm going to pay you under the table. It means the government doesn't know I paid you. That's what that means. That's why I pay my dad in cash, too. I don't write him a check. If I do write him a check in the memo, I write, like, for whatever. I don't say it's, like, for childcare. The other one that you could get is the earned income credit. It's if you have low to moderate income. I don't know what this year, what that tax cutoff is going to be for the amount, but you can get an earned income credit. So they'll take off of how much you owe on taxes if you don't make enough. So that's cutting you a break for how much you owe. And the other two vocab words on here, all tax deductions and tax credits are subject to certain limitations and restrictions. If you use a rule to your advantage to lower your tax burden, it's not breaking any laws. It's called tax avoidance. You're using the law to your advantage to have to pay less. That's tax avoidance. But if you lie, that's committing a crime, right? So like Abby asking about who can claim who. If my parents claim me and then I claim me, I can't do that. That's me trying to pay less, but I'm lying about it. You can't claim yourself two different places. That's called tax evasion. You're evading the law from that one. Okay, tax avoidance is you using the law to your advantage, but you're following the law. That's okay. But when you lie about something, that's tax evasion, which is a crime.